Welcome back to another episode of Community Corner Podcast, Personal Finance Edition. This is Olivia, joined by my co-host Rashmi for another interesting episode.
Today, we're going to be talking about how growth in technology is impacting investments and how you can take advantage of that for personal success.
So we all know that artificial intelligence has been growing for a long time. And an interesting thing is that investment companies have been using artificial intelligence for a long time. Hedge funds already use them to gain slight advantages, and they've actually been using AI for wealth managers since 2008.
And what's really interesting about this is that AI kind of does the work that humans do, but faster. It helps process and analyze data quickly in order to make effective decisions. So there's a stock screener which allows you to filter the stocks on certain criteria, and it helps to quickly interpret the data, which helps you in making those predictions.
And when you have portfolios automatically built by artificial intelligence, they can be optimized for your specific goals or the needs of an investor or any group of investors, like in a mutual fund, really quickly, a lot faster than if a human was doing it. And they also can rebalance those portfolios like as time passes when the market's changing by analyzing that and rebalancing if the target and the selections aren't matching up.
Yeah, and I think that something that humans tend to do is obviously act more on their emotions and their impulses, and that can result in them making irrational decisions. But AI does not do that. It reduces that emotional aspect of trading by making tools that automatically make trades, and it's based off on pure logic and reasoning.
Exactly. Like a human might see that a stock is going down and automatically think of selling it, but an artificial intelligence might not do that because they will probably wait longer and see what the trends are rather than looking at just the most recent shifts in a certain stock. And that also helps to reduce overexposure and have that risk management because it's not that immediately one slight change will cause you to completely change your portfolio.
Exactly. I think that it also just minimizes that extra busy work that a lot of people when they're investing personally do. It just makes things a lot faster and quicker.
And another way that artificial intelligence is changing the world of investing is with RoboAdvisors, which are essentially digital platforms that provide automated, algorithmic investment services with minimal human supervision.
Yeah, and what's really good for this is that it offers goals and surveys for how to improve what you're doing currently. And it gives you passive investment strategies to help you figure it out without the need for a human to be there and give you that advice.
So, like we mentioned, this artificial intelligence and robo-advisors have been used for a long time by professional investors, but they're now available for individual investors as well. I mean, we can all think of 2023 as kind of the breakout year for artificial intelligence as things like ChatGPT became a lot more common. But there's also robo-advisors, which are specifically for investing and a lot less expensive than a real wealth manager, but they can still do the same thing.
Yeah, and on top of that, they're available all the time. You don't have that 9 to 5, I'm going to be working at this time. You can ask the robo-advisor anytime you have a question.
Yeah, and another benefit of this is that it's easy to start, and there are robo-advisors that can start with as little as $0 to open an account, and you can try it out, try a robo-advisor, see if it works for you, but if it doesn't work, you haven't really spent any money on it, and you can just close that account and continue with investing on your own or hire a real wealth investor.
Yeah, and I think the next factor kind of ties back into AI. It's built on data from the past. It analyzes trends from maybe 1 year ago, 2 years ago, and it helps you come to a more accurate decision rather than just looking at currently what's happening and making a decision based off of that.
Exactly. So altogether, these robo-advisors and artificial intelligence in investing as a whole, it's really working for basic and entry-level investment. So for individual people that are just getting started with investment, you might want to start with using some robo-advisors, seeing if it works for you. And if you notice that it isn't working for you, then you can move on to hiring a real wealth manager. But using artificial intelligence is a good way to start out without spending too much money on getting investment help when you're just trying to figure out how the whole thing works to begin with.
Exactly, and the fact that it costs little as $0 for opening one is really, really great for basic and entry-level investment.
But there's also a negative side to that, that it is so cheap and it's so accessible to everyone, and it's also artificial intelligence, and it might not always be right. Sometimes you do need those human, quick, snap decisions when you see a stock going down. Maybe you can analyze it and think, like, this is going to continue for a long time, but a robo-advisor might not think the same way.
Exactly. And kind of just going back to what you said, they're kind of ill equipped to handle certain scenarios. Like, they don't have that fast reaction time of what a human does. If there's a sudden influx of wealth that happens, they may not be able to react as fast as a human would.
Yeah, especially if you do suddenly come upon a lot of wealth or start having a lot more disposable income to put into your investments, a robo-advisor is probably not the best place to go, because once you do have a large amount of assets that you can invest in, you will be wanting to have a real wealth advisor, not just a robot or artificial intelligence aiding you.
Exactly. And since this is kind of only working for basic and entry level investments, you're not going to get that advanced and sophisticated services that you would with a real wealth manager who would give you more experienced feedback, because obviously they most likely have more experience than a basic level robot.
And furthermore, they're not really anticipating like certain developments in markets. Like, there's no way that a robo-advisor could have anticipated the pandemic, and right when the pandemic started, perhaps a robo-advisor would have said, don't worry about it, keep all your investments, but a real person might have been thinking, I should sell them off. And especially if you do have those high-level assets, it's better to be thinking for yourself or having another person doing those types of high-level decision-making for you.
Yeah. And what's really interesting about this is there's actually many companies that are providing robo-advisors. So there's a Wealthfront, which is probably the best rated investment robo-advisor company with a $500 minimum account and a 0.25% fee for most accounts.
So that's kind of an account that's for people that are looking to get a lot out of robo-advisors, but there also are accounts for beginners, like Betterment, which offers a $0 minimum on accounts, which is a lot more realistic for a lot of people.
Yep.
And it only takes $10 to start investing with a robo-advisor, but it is $50 for crypto and $50 for rebalancing.
Yeah, so you can see that the more things that you want out from the robo-advisor, the more you do have to pay for it. But I think Betterment is a great start for that. And then there's also SoFi, which is also best for low cost. It's a $1 minimum and $0 fee.
So these companies like Betterment and SoFi are possible ideas if you're looking to do some robo-advising to help you with your investments. But obviously, this could all be done by an individual. And if you're starting out with it and it's not working, but you still want that advisor, it's probably best to look for a real wealth manager at that point.
Yeah, but overall, I think that this is a great way to, even though this has started in 2008, that there's a lot of prospects for this, and it's definitely going to improve. The ill-equipped to handle certain scenarios, and that lack of quick thinking could be solved in the future as we speak. So I think that if you are interested in something like this, you should definitely do some research, because everything changes by the second. So there might be more updated versions of the robo-advisors currently.
Of course. So that's all for today's episode of Community of Corner Podcast, Personal Finance Edition. I hope you learned a little bit about robo-advisors and how you can use artificial intelligence in your own investments. Thanks for tuning in. This is Olivia and Rashmi, cashing off.